ALPP, per popular request, has been making some respectable moves to the upside. Let's go ahead and validate what could happen for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this actually happy Martin Luther King Day, right, you guys? So yeah, on Monday, man, cool. So yeah, let's go ahead and dive into ALPP. We're going to be touching on some technicals, raw price action, and statistics on this particular ticker. Okay, so before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. All right, so with that said, let's go ahead and dive right into the charts. All right, you guys, so we're looking at ALPP on a daily, and we can actually see right here that we are forming a right-angled triangle, okay, so, or a descending triangle as some people may know it. This triangle is very particular as it does have mathematical properties as well as psychological properties to it too, opposed to literally any other formation in ever. Okay, so yeah, let's go ahead and touch on some small details here as I would like to show you why this range is actually located right down here. Okay, so I mean, yes, you can obviously see that there are lots of candles right over here that are using this this trend line as a form of support, right? But I would like for you to take a look at why we're holding this support. It's very important for us to know because this is a very important and it's considered an inflection point. Okay, so let's go ahead and zoom out just very hugely. Okay, so let's go ahead and take the visibility off of our moving averages and take a look at right over here. Okay, so this is why we're holding that area of support, because back here on, let's see, May 1st, 2017 to about May 2nd, we formed this gap. Okay, so that gap has a range of about 49 cents to about 54 cents. Okay, so now let's just go ahead and get that perspective a little wider once more so you can see how that is actually playing with our price action. Okay, it's very interesting because this is, I tell people all the time, I tell you guys all the time to maybe consider leaving in your gaps for future play. All right, but in this case, of course, you know, this has been years and years. So let's go ahead and continue with our analysis. This formation tends to break out at about 70% of the to the apex of the formation. Pardon me. Okay, so in this case, 70% could be located at about 200 days. So upon the start of this formation itself, we're on the daily chart, so please remember that. Okay, so 70% would essentially be right over here, and just, I'm not saying that this is going to wait that long, right? But what I am saying is that it does typically tend to realize at that time. Okay, so from our current location to that point in time, it would essentially be another 39 days. Okay, so again, I'm not saying that it will do that. I'm just saying that it typically does tend to break out per the, you know, on those days. And now this formation also has play for the bearish side and the bullish side. And how can we figure that out? Is actually by taking a trend line from the hypotenuse of the triangle, the highest point, to the very lowest point of the triangle, and that would essentially give us that price objective. So if we were to apply the objective trend line to the supposed area of breakout, which would be that 70% or 75%. So I'm going to just go ahead and do it at the 70% at its earliest, right? We can actually see that it would be suggesting a topside target of about $1.45 right about there, okay? And as you can see, that $1.85 is absolutely sharing confluence with let's just go ahead and show it, with all of these kind of iterations as a form of support, okay, and resistance. So I'm talking about the range between January 2022 to about March 2022, okay, you guys. So it is a pretty important area of resistance and support that has been used previously, okay. So that's where it's suggesting that we would go. Now, if we were to look at the bearish side, we can actually do it the exact same way. We'll just take that that trend line and apply it to the downside. Okay, so let's just go ahead and put it on that implied 70%. right, to the completion or to the apex of the triangle. And now we can see that it would be suggesting, I'm just going to go ahead and draw that trend line right over here so we can all be in the same page. Okay, so there is a confluence here. Lots of resistance touches right here, support touches right there, some resistance here, lots of resistance there, and lots of support right over here. Okay, so both of these targets are absolutely showing us the potential of some areas of interest. Okay, so now how do we validate that this thing is actually going to help us make the upside or downside move? Well, we can actually continue validating. So let's go ahead and now move on to the next chart. So this is the statistical side of the analysis, and I also have a different perspective to show you guys. Okay, so we're on the daily chart right now, and I can actually zoom in to show you a different perspective of what we're doing in the price action, if it is in the case that some people are chasing the formation like this. Okay, so you can see that we are also potentially in a descending channel. Okay, so and it is touching some, and it is respecting the trend lines pretty nicely. Okay, so if it is the case, then we can essentially face a potential continuation to the downside. But since this is a daily, we have to keep in mind that this is likely to, take a long time to resolve. I mean, days and days and days and days and days. It doesn't mean that we can't actually move up in wick or something and then come right back down, right, to try to respect this descending channel. Because if we did move to the upside in wick and touch that $1.22 range of this, the triangle objective, then that would essentially solve the triangle and then retrace, right? So now if we did go to the downside and look at that 21 cent target, that bearish target, so we can actually just see where that 21 cent would essentially be. Okay, so it would be, honestly, let's just go ahead and continue to the downside like this and see if we can actually find that 21. Okay, it's just way too far already. This is already May. I don't think that we would essentially do that. The more the probabilities are actually landing to the upside, in my opinion. Okay, so please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and everything will be just fine. Okay, you guys, I can't suggest for you to buy or sell any assets. All right, but I am here to help. So let's go ahead and now continue our validations. Okay, so yes, now let's focus on, now that we have the second perspective beyond the triangle, let's take a look at our statistics, okay? Because this is playing out some very nice things too. All right, so for the new viewers, this is volatility you're looking at, represented by this indicator BBWP. So volatility is actually direction neutral, and we pair it with stochastic momentum, which is this indicator below it, to give us that true bias. Okay, so now, I mean, true bias is let's just say it's given us the asset's direction 75 out of 91% of the time throughout many tickers. So it is good, for us to factor into our probabilities. Okay, so what I have done here is that any time that volatility has essentially reached the critical volatility zone in full contraction and started an upside pivot beyond the 15th percentile, I have taken note of that iterations. I can just show you if I can just zoom into one of these iterations. I've actually taken that note of that iterations upside thrust, the duration of the iteration, and the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so that gives us all of these samples give us our data set. Okay, so now let's go ahead and just take a look at those now. Okay, so where are the results? Where are the results? Here they are. Okay, so we're just going to bring this down right over here and talk about them. Okay, so now particular to the daily chart, remember, okay, so we're looking at a total 28 iterations throughout the entire trading history of ALPP, and we have guessed Volatility versus momentum have guessed the upside correctly 15 out of those 28 times, giving us an averaged upside accuracy of 53.57% with an averaged upside thrust of 207.88% over the span of about 7.33 days. This is proof of work. Very interesting, short amount of time. Okay, so now please remember one thing, okay? As I do get a lot of concerns regarding this. I am talking about statistics, not certainties, okay? These are not certainties whatsoever. In fact, I encourage you to take a look at the BBBY video that I just put out so that you can see a clear example of how statistics can be overshot. Okay, because I did notice a 69% move to the upside, but yet it moved up 105. Okay, so know that these are they're statistics. Okay, the mean is there for us to look and evaluate the space between it. Okay, so probabilities is always the name of the game within the trade. Okay, please know the difference. All right, you guys. So let's just go ahead and take a look at what has happened thus far. So since the firing of the signal, okay, so I'm talking about since volatility has now crossed the 15% mark and pivoted towards the upside alongside momentum, actually, pitched to the upside as well. We can actually see that we've already made a move about 23.51%, okay, to the high that we were just looking at recently on the previous day of trading at about 70 cents, almost 71 cents. If we were to apply the entire move to the upside, that would essentially, I'm talking about the 207%, that would essentially put us at about $1.74. Okay, so it is significantly higher than what we're looking at here at $1.44. Okay, so that $1.74 is actually taking us to the next relevant resistance. So it's now giving us a range of resistance. Okay, so now from this area here, from the triangle's price objective, we can actually now take this to this candle right over, let's see here. We can actually see the resistance of this candle right over here and the resistance of this one right over here. So this is now our area of interest for the upside, and that is particular. It is very particular to the statistical maxed out upside. Okay, so meaning that it can overshoot it, it can undershoot it. Okay, so it's probabilities over here. Okay, you guys. So that is what I'm looking at. So now let's go ahead and move on to the last part of the analysis, as it will be the RSI. Okay, so what we're looking at here is the divergence chart. Divergence is the opposition of price action versus momentum, and in this case, momentum represented by this indicator, RSI, relative strength index. Okay, so the purple line represents the relative strength signal, and the 14-day moving average is this pink line. It's a simple moving average. Okay, you guys. So as you can see on the daily chart, we have printed what looks to be 1, 2, 3, and 4 drives of a phantom hidden bearish divergence. Okay, so that happens when momentum is making a series of higher highs, just like you can see here, and making a series of lower highs in the price action, as you can see right over here. Okay, so we have a few drives suggesting a downside. Okay, now I personally am seeing a temporary downside. I don't think this is a reversal. I think it's a pullback, a reaccumulation period. And why I can say that? Well, let's just go ahead and continue validating, because the answer may be here. Let's open up that multi-pane and get that true edge. Okay, so if you are curious as to what time frame I'm in within all of these RSI panes, I suggest for you to look right up here. Okay, so I'm going to select the 30-minute. Okay, and you can see that I'm on the 30-minute. When I select this one here, you can see that it shifted to the bi-hourly. When I click this one here, you can see that I went to the 4-hour, this one right here, 8-hour, and so on. Okay, so let me just go ahead and pull up the RSI diagram here. These zones are very important. Okay, so I will be speaking about these very often. So these are the 4 zones that I would like for you to take a look at and as they are located right over here on the live chart. Okay, several iterations of them. All right, so now let's go ahead and start off just like we always do in a 30-minute immediate short term. So we can actually see that there is a suggestion to the downside, but this is not credible enough for us to look at. Okay, so just in case, the micro time frame is also showing a potential sideways trading event. Okay, so this is likely to live out pretty fast. Remember, it's just the immediate short term time frame. The time frames I'm going to tell you right now, the ones that have my attention fully are actually more so the 4-hour and the 8-hour, followed by the 3-day. Okay, so those are my interests. Okay, and let's go ahead and validate why. All right, so now the bi-hourly is showing that we may potentially be facing a limited downside before a recovery. Okay, now the danger here is that as soon as we do reach the 14-day moving average right down here at about that 61%, we are in danger of getting pulled right into the prior zone, which would be the the bull weakness percentile. Okay, so now the 4-hour is giving us that limited downside feeling. And the reason why I can say that is because if you can see here, prior iterations have suggested that the 14-day moving average is being utilized as a form of support before a continuation to the upside, or as a form of a guide. Okay, so we can see that we're now trying to come right back in to the 14-day moving average support line. Okay, so now why can I suggest that this is just a bounce? Well, it's because we, in failing the bull strength percentile, when we come right back down here, we would then be in the gravitational pull zone of the bull weakness percentile, meaning that not only would we find support from the 14-day moving average, but also from that gravitational zone, thus having us bounce and find that upside continuation. So that's why the 4-hour is very particular to me. If you can actually focus on the 8-hour, you can see that the situation is very much the same. Okay, literally at the same place. So we're suggesting just a limited downside before a continuation to the upside. Have used that 14-day moving average as a form of support. So we now know that we do have a viable area of support, or a validated area of support at that. Okay, and now as we move on to the higher term timeframes, we can actually see that this is a buy daily. Okay, so this is for sure within the medium term timeframes, and you can see that it is just a small pivot with not enough juice for a continuation to the downside, and it's very much close to that gravitational zone of the bull weakness percentile, suggesting a potential correction to the upside. Okay, and now a hint from the 14-day moving average suggesting a continuation to the upside as well. Okay, so now the 3-day is, again, this is where it's catching my attention. Please notice that this pivot is absolutely significantly pushing towards the upside, and not only that, we appear to be using a type of linear regression here. Okay, so you can actually see it just like this. Okay, we're using a type of trend line regression here, and there is the potential to where we can find a massive upside here. It's a 3-day. Okay, so 3 days is a long way. Okay, so that is suggesting a continuation to the upside in a massive manner, and now you can see that the 14-day simple moving average is starting its correction towards the upside as well. It's very much starting its little pivot here. Okay, now let's just take a gander at that 5-day. 5-day also brand new, fresh cross above the 14-day moving average, and absolutely pitched to the upside. So what that's essentially telling me is absolutely in accordance to what we talked about earlier. Okay, you guys, we can actually see a pullback followed by a continuation to the upside. Okay, so now where would that pullback essentially land though? Let's go ahead and validate. So let's just load up some SMAs on the daily and see what we have in store for us. Okay, so right away we can actually see that we do have the SMA 100, the blue line, and the 50-day a simple moving average as well. Okay, so that location is at about 62 cents and about 63 cents. Okay, so now let's just go back to our RSI and just see what time frames are suggesting that, because the upside may not start until about Oh yeah, so it's not going to start until about the 3-day chart. So that so that's actually telling me that we may very well touch down on a resistance. I'm sorry, a support range located between the SMA 10 and the top support line of that gap that we filled from 2017. Okay, so that would give us a support range of between 54 to 57 cents, almost 58 cents. Now let's just go ahead and validate with some fibs to see if we have that continuation to the downside. Not to mention that the downside is still being suggested here with a pretty large daily shooting star candle. Okay, so this shooting star doji absolutely gives us a signal of a potential pullback. Okay, so now the areas of interest we have are, wow. So definitely the SMA 10 is absolutely in accordance with our 2.272, and the top of our gap from 2017 is absolutely in confluence with the 2.618 at that 54-cent level. So this is absolutely the area I'm looking at for reaccumulation, followed by a continuation to the upside. All right, so and then we may actually be able to start the upside upon breaking the 200-day simple moving average, which is another obstacle that we do have to face. Okay, you guys, so I still see some upside coming in, and we just gonna have to experience a bit of a pullback for the next potentially couple days, maybe recovery by about Friday, or even maybe recovery by Thursday or Friday. Okay, if it does play late, then we can actually see a recovery potentially by the following week, Monday. Okay, so please remember, I'm not a financial advisor, okay, you guys? If you do want to get in touch with me, don't hesitate to do so. I know it's taking me a while to reply to everybody, but please know that I'm trying my best to reply to as many people as I can. I have seen the requests for ALPP. I am not responding because I am not sure if I'm going to be able to get to it with all the work that I am currently experiencing with all of the communities, okay? So I will try to get to you as soon as humanly possible. Please do not fall for the scams in the comments. Those are absolutely bots, or I don't know who the heck they are, but they're trying to take your cash, so do not give them your cash. I do not have a WhatsApp. I will certainly not put my WhatsApp, or I don't have one in the first place, so I'm not going to put my contact information in a comment, and I will certainly not engage a conversation with you first. Okay, you guys, so please make sure not to fall for that. And yeah, so that's going to do it for the video today, you guys. I wish you a great rest of your long weekend, and I will catch you at the bell mañana. Adios.